What's up, all my investors? It is Shaddai, and I'm back again with another episode of HINANCE, breaking down the complex financial world for everyday people like me and you so we can make some cheddar, some dough, some bread, whatever you want to call it. Today, we are talking about stimulus, potential market crash. I know I'm always talking about it, but listen, I got some details that you should definitely be paying attention to. And I'm going to be speaking about the best ETF slash the best hedge fund manager there is out there, and some ETFs that you should be looking to buy into. I'm going to be speaking a lot of details today, so make sure you watch all the way to the end. And of course, don't forget to hit the thumbs up, like this video, subscribe. Let me know how you're feeling in the comments. How's everyone's portfolio doing? I hope it's doing good. And I'm just here to continue to spread whatever information I find so that you can do some more researching on what I say to see how it can help you. So let's get right into it. But before we get there, if you're interested in joining the stocks group chat, shoot me a DM above. I will get you all the details needed. Of course, the biggest part of economic news this week is going to be stimulus. Are we getting it? Yes, it's coming one way or another. You are going to get your $1,400 check. But I do want everybody to realize, at this point, once this bill passes, $1.9 trillion, we would have reached $5.3 trillion in spending within a 1-year period. And I can guarantee you that that will cause something to happen down the road. When? Pay attention to the rest of this video, and I'm going to share some more on that. But yes, you're going to be getting your $1,400 checks. They could be changing some things on it. So what I'm reading that they're changing is potentially who actually gets, they're changing the tax bracket, who actually gets this check. So I think before it was like at $75K a year, it starts to trickle down, and I think they're trying to get it at $50K a year. So if you made $50K or less in 2019, unless you just file your tax returns super fast, but there's still no guarantee what tax year they're going to use. If you were making $50,000 or less either year, then you are definitely getting your $1,400 check. When will it be? It's probably going to be around March 1st, first few weeks of March. If we get it towards the end of February, I'll be extremely shocked, but you never know. Right now, the Democrats are using a streamlined process, which pretty much means they don't need Republican support. As you know, they run Congress, they run the Senate, so it's a Democratic Party. They're going to get this thing by, but they're still trying to take input in from the Republicans because, they're still trying to stay, they're trying to stay on the good side because they know that this is going to continue for the next 3-4 years, maybe next 10 years. So they got to work together to try to get in some details that's, both sides are happy with. Obviously, Republicans don't want the Americans to get more money. But if the Americans don't get it, then the corporations are going to get it. So I'm actually glad. And let me know in the comments. So let me know how you feel. Do you think that this has been good for the economy? Some people don't need the check. Some people are going to save it. What it's meant to do is make people spend it. Some people have been able to pay off bills, debt. So I think it's very good for the economy, but I also am very aware that the more trillions goes up, the worse it's going to be down the road. It could be for us. It could be for our children. We just don't know yet. There's still a lot to be discovered. But unemployment seen a little bit of an increase, and I think that unemployment we definitely have to pay attention to. I think it really tells us how good the economy is really doing. And we did see a decrease in the unemployment rate, I believe from 6.7 to 6.3%. And a lot of people were shocked, but it's a good sign. It's a good sign that the unemployment is going down. Some more jobs have been added. I'm a little disappointed to read that women have been affected the most. I think about 50% of all the job lost, roughly 50%, is women. And that hurts my heart. There's so many queens out there. And if there's any geniuses watching this video right now, come up with a business to get more jobs to women. They're definitely the ones that most need. Women and minorities are the two that are being hit the hardest. I'm a minority, so this definitely hits home to me. I want to take care of my queens and the people that look like me. So I'm always trying to come up with something. But if I don't get there, if one of you guys come up with this great, amazing new Amazon idea, please hire minority women and women in general and minority men. We need it because we're being left out in the dust, and it just doesn't make me feel good. But at least unemployment rate is going down, so it's something to look forward to, isn't it? We got a bunch of companies that are also reporting earnings this week, so you definitely want to pay attention. And one thing I want to say is that I don't really know how important it is to pay attention to earnings this earnings season, because a lot of stocks that have beat expectations, they're selling off. They're not going on these nice growth patterns that I would have expected. So a lot of them are selling off, but there's tons of companies, plenty that you may know, that are reporting this week. Twitter, Zynga, one of my favorites. I expect Zynga to be up $12 some point within the next month or two. Canopy Growth. Y'all know I love Canopy Growth. I'm a stronghold of Canopy Growth since last year. And there's also Coca-Cola is going to be reporting. Pepsi. Did I say Twitter? I said Twitter. We got a couple other ones on here on this list. Disney, Spirit Airlines, Lyft and Uber. Those are some ones that are reporting earnings. So make sure you pay attention. Listen to what they're saying. Read the transcripts. Try to understand. Ask questions. If you have a question of what something means, please come back to the channel. Ask me. I will get the answer for you. I'll try to get an answer for you. Try to explain it to you in a more simpler way. And these earnings call just kind of helps your whole trading thoughts, because you're listening to what these executives are saying and how it's affecting the market, when they beat, when they don't beat, what their future expectations are. Please don't forget that stocks is a representation of the future. So you want to be knowing what these companies plan to do going forward. Because if they say, hey, going forward, it's looking like fire, you definitely don't want to be holding on to that stock if the executives are letting you know now that the future is not looking good. So pay attention to as much as you can on the earnings call. But like I said, I don't expect anything to go up, but who knows? This market is super unpredictable right now, and we just have to just watch and continue to just do our research. Peak valuations, and that word is being used for just the sole purpose of me feeling like we have hit the peak. Like, we dipped down, we came up super fast. I know plenty of people will agree with me that we came up so damn fast that now I'm starting to wonder, have we hit our peak? Is this a W? Is it going to go boom, boom, we're here, and boom again, and then up for a larger blast off? It's so some people say we're in the V recovery, and it's hard to see, and it's hard to tell with all the stimulus being pumped in. And there's analysts saying that there's a 70% correction coming this year. That's what I've read so far. That this year, 70% correction coming, 70 to 80%. Some say 50. Some say we've already hit a small correction last week. And one analyst even said by June, something is going to happen. And if you start to break down all these, the way that stimulus is moving, because honestly, I'm going to be completely honest with y'all. And I said honest twice, so y'all know I'm being honest. After the stimulus check, I don't want to see no more stimulus packages. I don't want to see no more stimulus money. I don't want us to continue to print money, because what's going to happen is inflation will continue to increase. They're saying rates are already starting to rise, so we're going to see some type of inflation, because they were saying that rates on I think it was the 10-year Treasury, weren't going to go up until there were little signs of inflation. So if rates are starting to rise a little bit on that Treasury, that means there is some inflation to come. And Once the stimulus check and package fizzle out by summertime, because if we get it early March, that money's going to be gone probably by mid-March, at least for the people, for a majority of the people, because they're in debt. People are trying to pay down whatever they can. People are spending it. Some people are investing it. Once that fizzles out, then what? Like, are they seriously going to consider spending another 1 point something trillion? It's a very scary situation. So, an analyst said, and please do your research on this. He expects, I forgot his name, something Vent. He expects a 5 to 10% increase before we start seeing a pullback. And this has made me wonder, because man, a 70% correction would just be lethal. The amount of people that'd be selling, the amount of people that would be losing money, because not a lot of people have the patience to hold on long term. It'd be a catastrophe in my eyes. But I don't want to see that. I still, there's still a lot of bullish action right now, especially with the stimulus talks. But we also have to pay attention to the vaccination, the zine. Are people starting to get it? Are more people getting sick? These are things to watch out for. Watch out for these earnings. Watch out for the unemployment rate. Because at the end of the day, if people aren't spending money, the recession will continue. And if people aren't spending money, businesses are closing, banks are getting tighter, they're not giving out as much loans, everything's getting tighter. The depression will follow if we don't continue to spend more money or print more money, because we ain't got no much money to spend. We probably already had debt. We had 30 trillion in debt as a country. So I don't know what we're going to do, but we need to start creating more jobs. And it's just, I think perception, our society is really good at putting up perception. But let me know in the comments your thoughts on that, because I feel like I can go on all day about what could potentially happen. Either way, just know that no one can predict the future. Just know that when you're doing your research, not a single soul. I don't care what they tell you or how many indicators they look at. No one can predict the future. That leads me right into the word of the week, which is EPS, earnings per share. And I wanted to bring this word to your attention because it's earnings season and you might see these numbers. Let's read the official definition for earnings per share. It is a company's net profit divided by the number of common shares it has outstanding. It's usually an estimate to measure corporate value. So watch out for these companies' EPSs. Are they growing? Are these earnings per share growing? Are they declining? This is usually going to tell you potentially where the stock could be going. Obviously, if the EPS goes down, that means they're making less money. And so that could lead to a sell-off. If the EPS goes up, that could mean they're making more money. Could mean that the stock is going to start to trail up. So pay attention to that in earnings season. Even when you're evaluating a company's fundamentals, when you're looking at their stats and their financials, check out their EPS, and it kind of going to give you a little indication on as far as the valuation. There's a million different indicators, but I think this is a good one just to start off. Just kind of break down a simple term. You might see it a lot, EPS. So now you know what it means. Let me know in the comments if you are now just finding out what EPS means. I'm interested to know. There's just a lot of words. They start to throw acronyms and stuff on it just to get people lost. So if you're not regularly in this world, you can easily get lost. With that being said, I am ready to talk about the best hedge fund manager, Cathie Wood. Shout out to Cathie Woods. Do your research on her. Very bright individual, has been managing these ETFs that have been doing very well. Exponential growth is what she calls it. And, she's always on YouTube putting videos on her thoughts. She's well connected with the millennials, I would say. And I really do believe she has plenty of ETFs to choose from. What are ETFs? Her ETFs consist of just multiple companies tied into one, so that you can invest all of them at one time without having to really think too much, I guess is the best way to put it. And I like her ETFs than the others. There's plenty of ETFs out there, but her ETFs, her strategy is based off exponential growth and innovative companies. That innovation, stuff that is disruptive, and I love that because I see tons of potential in investing in a company that is going to disrupt a whole industry, because that only means that their value is going to go up. Once you come in and shake something up, shake the room up, now all eyes are on you, and it's up to you to lead the way. So I really feel like she's been doing a great job. I mean, I don't have to feel it. The statistics say it themselves that she's been doing a very, very good job as far as the company she's picking to be in these ETFs. And there's plenty of them to choose from. There's ARK Innovation. I am invested in the ARK right now. It's available on Cash App. It's available on TD. It's available on Weibo and everything. ARK Innovation. Do your research on them. On that specific ETF, has stuff like Tesla, Square, many more. But like I said, do your research. There's ARK Next Generation Internet, I believe. Yep, Next Generation Internet. I don't, off the top of my head, I don't know what specific companies are in that one, but innovative technology. ARK Autonomous and Robotics, I believe that's what it's called. ARK Autonomous Technology and Robotics. Let's be specific now. I'm sure that has Tesla in it and many other companies that have to do with autonomy or autonomous driving or autonomous technology and robotics, the stuff that we can expect to see in the future. This is the part that I love about these ETFs, is it's all future stuff. And that's what I'm here for. I'm here to invest in these companies that are going to disrupt the future. One of my favorites that I've been looking at and I'm watching very closely, ARK Genomics. This is this industry, right? This specific ETF, ARK Genomics. ARK Genomics Revolution. Let me say the actual name. I can't leave out the full name. ARK Genomics Revolution, because this is going to be a revolution. If this technology that these companies are working on works, it's going to be a life changer. This ETF is focusing on enhancing the quality of life for humans. And you might be wondering, how is that possible? Well, genomics and bioscience, they're working on genetically, being able to fix things in people from the genetic point of view from the beginning, because that's what makes us up, our genetics. So being able to fix humans and disorders and stuff in the youth. There's companies like Teladoc Health, which is a company of the future. They're changing the whole health experience with technology and being able to check on people from their homes using devices. And they've made some amazing acquisitions. I've told people, listen, a company of the future is one that's making partnerships right now. They're making acquisitions. They're buying up other companies to make theirs stronger. Teladoc Health is ARK Genomic Revolution's biggest holding. I think about like 8.8% or something like that. But it's a great ETF. I'm not gonna lie. If you're into all that stuff, also there's ARK FinTech. Yes, ARK FinTech. I believe, yes, ARK FinTech, which has a whole nother set of companies. Please go on the website. There's so many charts and information and a lot of things to review. People have been asking, I see people wondering, especially people that have been losing on AMC and GameStop that had just got into the market. What stock should I buy? What stock should I buy? Look at these ARK ETFs. I'm not telling you which one to buy. I'm telling you, look at all of them and just figure out which one you like the most. If you're indecisive and you don't know what stocks to buy, you got money on the side, you're trying to figure out where to put it in play, check out ARK ETFs. I guarantee you won't be disappointed, because me so far, I haven't been disappointed. I have not been disappointed with my ARK Innovation investment, and I got dividends. So you always got to be happy when you get dividends. But yes, do your research as always. I always tell y'all, don't forget to like, subscribe, share this channel with your family, friends, cousins, brothers, sisters. your boyfriend, your girlfriend, whoever is trying to make money from their phone. I'm here to try to break down this complex world in a simpler way for everyday people like me and you. I appreciate you all for watching. And if you want to join the Sauce Group chat, shoot me a DM above. I will get you all the details needed. Thank y'all for watching again. I'll see y'all tomorrow.